Hi guys, welcome back. This is just another trade breakdown of the price action leading to Friday. Uh, let's see what happens, and I'll try to go through in detail as much as possible. But this will be a very quick video as to what happened. So let's start out with the weekly time frame as usual. So if you don't have MNQ connected to your TradingView, you can of course use the NAS 100 Pepperstone chart. So either way, it's gonna be the same. All right. So let's just stick to NAS 100 for now. So it will be similar to your charts. And let's try to rewind this week's price action over here. All right. So what's can you see on the weekly time frame? You can see that the price has tapped into a weekly fair value gap, right? Um, so price has tapped into a weekly fair value gap, um, created a bullish candle, um, also swept these lows, right? There's a lot of sell side liquidity which has been swept. So coming into this week, our main priority was looking for buys, right? Main priority was looking for buys, targeting these ranges, right? This high. Now, if you are expecting a bullish week, what do we expect? We expect the week to open, um, create a low, and then high, and then close, right? So that's what we expect going into a week. So when do you think the low or the high of the week can be created? It can be created on days where you have high impact news, right? So most of the time they can be on Tuesdays or Wednesdays. That depends on when the high impact news is. So we identified this is our target as a whole, but we do have to understand that price can potentially reverse from this key area as well. What's that? That is a rejection block, or it can also be an order block on the lower time frame. All right, so let's just mark that as well. Then so if you've seen my top down analysis video on YouTube or on the freebie channels, you guys already know this is how we dissect price action or do a weekly outlook, right? um, then we have these key areas marked on the daily time frame as well. um, and then you can mark this order block as well, which is a daily order block or an RV relevant break even, but this has to go up for us to consider that as a relevant break even. um, but yeah, apart from that, can you see anything on the daily time frame? Nothing quite significant, isn't it? Now we do understand there is a daily fair value gap created over here, right? Daily fair value gap created over here, so which means price can go up, right? Price can travel up, create a reversal or a pushback, and then maybe continue to go towards here. That's either one option, or price can instantly drop down, go here, and then create the low of the week or go up, right? So those are the kind of possible scenarios we would be looking into when you go for a week, right? And you can always drop down into 4 hours as well and try to look to refine the key areas, and then you'll understand, okay, that is a 4 hour fair value gap here, which is a potential key level that we can look for sells, right? Even though they will be short-term sells. Why? Because our weekly buys is buys, right? We're looking for buys for these liquidity target. But price can reach over here, right? That is our target. So that's what we were looking for. That's why I posted on the Outlook channel inside the premium as well. We can look for a short sell, but our main target is to look for buys because a NAS or NQ is bullish and we don't usually like trading against the bias, do we? When you look down, you have a 4 hour fair value gap over here, right? You have a 4 hour fair value gap over here, and you also have a swing low here, which means price can of course come down, sweep this low, maybe tap into this liquidity in this fair value gap, or even sweep this liquidity and then go up, right? But it all comes down to timing, price, and everything, and how it turns out to be. So I don't have enough time to go through the whole price action breaking down every detail, so I'll just go through Monday to Thursday daily time frame what happens, and then we'll discuss in detail about the Friday's price action. Okay, So you see Monday open with a gap, big gap, swept this sell side liquidity. So once you see price action open like that, right? There you go. So once you see price action open like that, all of a sudden you make a weekly outlook and it's already gone through that created. Now what does this become? If you guys know, so you know we trade HLT, so hybrid liquidity. So once it breaks through that, this will become a support, which is also called a breaker block, right, in ICT terms. So you can call it whatever you want, right? It's all going to be the same. So we expect this to hold for somewhat, and then you wait for liquidities to be taken. Now when you understand price action is extremely bullish, that's when you try to capitalize on these movements, and that's why we were looking for buys on Monday, right, the whole time, especially after these sweeps, and especially on the 15-minute time frame as well. If you see how price respected um, the fair value gaps on the lower time frames, right? You can see this price respecting this and these levels as well, and these reversals were with the timing, right? 8:30, 9:30 timing, which I have told you guys. So look for buy setup because that's pro. You expect these fair value gaps to hold, you expect these lows to be strong, and then that's why we look to we anticipated buys, right? Now, so since weekly has gone through such a aggressive fashion, what do we usually want to see? Now, we want to see either price come back to make a pullback down, right? So you can do two things. Either you wait for a proper pullback to look for continuation buys. That's number one. Or you try to understand whether the price has swept any sort of relevant liquidity onto your left, right? Relevant buy side liquidity onto your left, and you're going to trade the counter trades, right? It's all a risky move, but you should understand what's counter trade, what's pro trade, and all that stuff, right? So when Monday closed like this, what do you understand? We have now created a daily gap, right? And you know about volume imbalances, how the price can always come back to fill these gaps. And especially when you leave a gap like this and you've seen weekly candle has opened like this. Now, for you to sell without a confirmation, at least a sweep of this high, or you see lower time frame confirmation where the structure becomes bearish, would be high risk, right? If you see price action becoming bearish, right? So in basic terms, you should see a pattern like this. Then you can continue to take the sells up to these levels, right? And what happened on the next day? Simple as that. What I told you, right? Daily high swept, and then so this day, if you are trying to capitalize the trade on Tuesday, then your trades would be valid after you see a 1 hour break, right? So you swept the previous day's high, and you see a clear break over here, right? That you can consider as a relevant break, or you could also consider this as a relevant break, right? And I always tell my students, if you have any questions as to identify whether it's a true break, you can always switch to the line chart, and then you can see there's a break here, there's a break here, so which means price action is being bearish, right? If you realize the price action being bearish, then you need to understand what is the intention of the price. Why is it being bearish, right? What's the reason? Is it trying to mitigate a higher time frame fair value gap below? Is it trying to tap into a key level and push the price up? That's when you need to understand, right, we're looking to fill in this gap or void, right? And that's what happened on the next day, right? So when price action pulls up like this, right, failing to sweep this low, right, failing to sweep this low, this becomes an A plus plus setups in our terms, right, where there's more sell side liquidity being created. Asia is making a false pullback, in our opinion, to create more liquidity, and all it wants to do is do this, right? That's what we were anticipating uh, the whole day. And then what happened, right? And yes, you can see swept. And where did it exactly um tap in, right? If you guys noticed, right, it swept this swing high, previous swing high, London rejected, and then boom, right? So when you come into trading, right, in the New York setup, you guys know we always stick to our time frame, right? This is the hourly fair value gap. You expect this to be a strong high. Why do you expect this to be a strong high? Because your daily bias that day was look for sells to target this liquidity. You have a trade idea. You know this is a pullback um, to trade into this low, right? Now, if this high failed, right? Let's say there was a failure to failure to hold this high, then in that case, if you look like this, then you would know your next target would be this. That's when you would be looking for buys. But until then, so you could look for sells up to here. Now you could get the fib. The only time I would look for a fib is to check whether the price action is in 50% of the range. Now, if you get the fib and then understand, all right, this is not much of a in a premium zone for you to sell, then you can be patient without taking the sell. But the best opportunity would arrive after this sells, um, when you know the next day, which is Thursday, you're gonna buy, right? So let me just switch back into the daily time frame um, for you to show you what the daily time frame would look like. So on the daily time frame, you see daily has stepped into a daily fair value gap, big weak rejection. Now remember our weekly bias of bullish price action, right? Now price has already filled the daily gap. So Thursday, Friday, it's a very easy bias, right? You're gonna look for buys. Simple as that, because we are looking for a bullish week. And what do you happen, right? Boom, simple as that on Thursday advice. Um, and I don't think I need to dissect Thursday's price action because it was very clear how as to how the price moved on Thursday, right? Swept this close, and you see 4 hour break here, more bullish price action. And when you switch to 1 hour, what do you see on the 1 hour? Price was beautifully respecting the 1 hour fair value gaps, right? You can see here. Look at that, right? Tap into that rejection, right? Rejection, and then New York, you just continue to buy. Simple as that. Such a beautiful price action, right? And in London, right? In London, look at that. Beautiful 1 hour fair value gap filled, right? And then push the price action. So you only need to catch 1 or 2 of these moves. You have to patiently wait in the London session or in the New York session and catch a 1 hour or 1 to 2 hour a trade. That's it, right? You guys need to stop worrying about high RR trades and ask the question whether you need to make money or whether you need to show off high RR trades, right? It's simple as that. It's because people are so obsessed with high RR trades. Um, that's when they fail to miss out on capitalizing the gains. Okay, now coming into Friday, which is a bank holiday, you can't expect of a big move. But what do you expect? You can now target these highs. You expect those highs to get taken. You can even target this one, which is an undeserved rejection block or whatever. It's RBE, where the price can still reverse, right? So we have all these liquidity areas, right? Now, I'm just going to delete this for the sake of it to make the chart clear. Then so I'm gonna do a detailed breakdown on Friday's price action. So what do you expect? This is an order block, right? Daily order block where the price can drop into to create the low and go to 4 hour. Now on the 4 hour, what do you expect? Can you see any 4 hour fair value gaps? That's when I saw this, and this is what I posted on the free trade ideas and look to see, keep an eye on the price action. Price can push here and go up during the Asia session, right? That is one of the possibilities. Is it the greatest possibility? No. Why? Because when you look at the range as a whole, when you look at the range as a whole, right, this is much in the premium range, and you know we need to look for buys on the discount, right? So what happens when the market opens? So we have a key level over here that is valid. We also see price action tapped in and go up there as well. So what exactly happens, right? Price drops and goes through it, and what does this become now? Right, an inverse, right? That's why you can look for sells once the buys fail. Once it doesn't hold, you look for sells. And until when do you look for sells? Until you find a proper key liquidity area or a key level. And where do you find those key levels? You can find over here. You can see there's a big wick, right? This is a key area where the price can drop into, or this RBE area can hold as well. Now, to get a clear idea, you can drop into lower time frames, right? You need to understand this should hold because this is a strong low. Why? Because that has tapped into a hourly fair value gap and caused high highs. There's no fair value gaps over here on the 1 hour, so you look for 15-minute time frame. And what do you see on the 15-minute time frame? Right? All you could see on the 15-minute time frame is this 15 minutes lows and 15 minutes 15-minute rejection blocks, right? So you can expect, okay, maybe the price is dropping down, maybe the price wants to come down near the New York midnight open as well, or the previous day's New York open. These are all liquidity areas, right? 8:30 a.m. So what does the price do? You have to patiently wait for the time, right? Your timing. Price drops, creates a rejection. Now, most of the time, what this does is it's still Asia session, so you need to be patient, and then the London opens. Now, if you are an aggressive person, right, trades aggressively, okay, 50-minute fair value gap got inverse, Asia low got swept. So this is where we use our liquidity inducement theorem strategies, right? Asia low, so minor liquidity. We do understand that the New York low is there, but it swept the New York open, right? 8:30, which you saw. So you can ask the question, is this a reversal? And that's when we bought the first setup, right? London setup, you continue looking for buys, and that's when London bought, right, up to here. And then you can switch to 1 hour. So that was during the London session. Now when London moves this way, and then it's trying to make a pullback like this, right? Fine. So now you need to ask, what's the price action trying to do? And this is the image I posted on the premium group, right? So you get the FIP and understand, okay, somewhat this is in the key area where the price action can make a pullback and still have a bullish P, right? We're looking for continuation buys because this is our liquidity target. These are the highs we are looking to target, and this is just sweep of the sell side liquidity. Price is going up, and then it's just making a pullback to what? To tap into this 1 hour fair value gap, right? Simple as that. So it's tapping into this 1 hour fair value gap. Now you need to wait for the timing, right? If you're looking for a New York setup, there's no point in you spamming the trades, right? You need to wait for a timing, right? You can drop down into the 15-minute to look for any refined entries, right? So what do I mean by refined entries? All right. So you can say that is a 15-minute OB here. That is also a 15 minutes fair value gap over here, right? Is price making a false pullback? What's it trying to do? There is also so I'm just going to refine this over here as well. It's key levels over here as well. So is price trying to sweep this liquidity and then go up on New York mid open? Now we just need to be patient until we get the New York open, right? And then what happens, right? What happens exactly over here? Makes a pullback, taps over here. But is it our timing though? Is it our timing? So this is a 15-minute fair value gap, right? So if you took this buy, this should be your TP, right? Or partial zones. Understand, you always trade from one key level to the other key level. Yes, price can go up. Of course, price can go up. Target these size, these size, these size. But can you guarantee it? No one can guarantee it, right? So you need to take partial. That's why 1 hour is good in my opinion. 1 hour, 2 hour maximum. Um, Especially if you're trading out of zone. So, but I waited patiently. So you waited patiently for what the better setup, and what is the best setup. Fine. Now you've got New York Open coming, right? And this is all Friday. Boom, sweeps the low, right? Sweeps the low. That's what we wanted to see. Sweeping of a sell side liquidity with a rejection, right? With a rejection. And what's the timing? That's important. What's the timing? That's the 8:30. So you understand about the 8:30, 9:30 key timings with a rejection, and you've got a bullish a candle all sweeping all that, and a bullish close as well. So this would be the ideal entry you could get. So if you're on a 5 minute 5 minute time frame, you either spam that, right, and target 1:1, or that's all you need. 1:1, maximum 1.5, because why we're looking for, we never know what the price would do. If you are gonna be conservative, then of course you can do this. Cover the stop loss over here, expecting okay the price can still come down and sweep the low as well, and then have a 1:1 hour. Simple as that. So you can go both ways, either aggressive or conservative, right? Lower time frame, just out of curiosity, I don't go much into one minute, but you can. What do you see here? Sweep of this liquidity close and a break of structure or a change in state of delivery, right? What does these signify? 8:30 open, sweep of the low at a key level, bullish price action, right? Come on, just signifies we need to buy, and that's when we bought, right? That's when we bought. Until when this? What do you think this is? What do you think this is? It's a simply a 1 hour high, right? That's what I marked as well. So it's simply a 1 hour high, right? You can see here 1 hour high. Now the problem is, what most people do is, I'm just going to delete this. What most people do is, once they see a candle like this, right, at a fair value gap, right, they immediately spam buy, stop loss below here, right, and they get swapped out. So they become the early buyers, right? They become the inducement, right? They do something like this, but they get swept out, right? Because the candle opens. Now, why do you think this happens? Number one is it's mainly out of timing, right? Out of timing. If you are gonna enter, right, you can go through and see. You can journal yourself and see how many times this happens when people have tight stop losses. If you're gonna enter, my friend, just enter with a big stop loss, cover it for enough of sweeps, let the price action breathe, and then you can target something like this. Then I wouldn't mind. Otherwise, what you're gonna do, you're gonna enter here, get stop loss, you're gonna enter here, you get stop loss again, twice you hit. After it hits your stop loss 2 times, then the price flies. Now that's quite sad and that's depressing, isn't it? So that's why you need to understand, if you are trading aggressive with a small stop losses, then you wait for the timing, accept the risk. If not, just let the price action breathe, give some air for the price action to move, and then just catch 1 to 1 hour, and then you close from here. Does it matter whether the price action goes up to here or here? No, it shouldn't matter. If you want, you can always look for re-entries later on, once it creates new 15-minute or 1 hour fair value gap, depending on how aggressive the price action is. All right, now this is almost like a 25-minute video. I didn't want this to um go this long, but if you got any questions, please let me know in the general chat, and I'll be more than willing to help on the Discord. Cheers, have a great weekend, guys.